Well, hello everybody. It is September 27th. This is the weekly review where we take a look at what happened, what we think is going to happen, and how we want to try to position for that. If we look at the numbers last week, you know, Russell, the big loser, 3.5%, NASDAQ 3% down. The Dow did pretty well considering that Nike, a big component there, did well on earnings. S&P down 1.5%. So on the year now, we're into the 6-7% range on the Nasdaq. Excuse me, on the S&P 500 and the Russell. The Nasdaq's down 1% for the year. If we flip over and take a look at the charts, just to get a feel for what happened last week, it was pretty much a down week the whole week. Market was unable to get any kind of upside. And what we really have happening here at this particular point is we have a range that is starting to set up now. And that range is pretty much that area, right? You've got some outside stuff, on the top side and on the bottom side, but for the most part, over the last 5 weeks, or I guess it's about 5 weeks, the top and bottom of this range is pretty much held, prices inside. So the take now is that you've got a range, and with the range comes the opportunity to fade the edges of the range, so buying and selling the tops and bottoms. But before we get too far ahead of ourselves, let's back up and kind of review, what's the major events that took place last week. There was this biotech sell-off. That was one of the last bullish sectors. They had held up reasonably well. Compared to most of the market, they had gone up a tremendous amount. I mean, if we take a look at that sector itself, you're going to see a bull market extraordinaire, right? I mean, this particular sector, since the August lows, moved from roughly $100 up to $400. That kind of percentage gain, of course, is huge, and the drawback, right, the pullback off of that could be substantial. So I think that it's a little early, and there is a member question about this this week. Where does one think about buying into this again? If you just look at this chart, you can see the last time it spilled, you saw some huge volume escalation. You're seeing volume escalation again, but it's not quite there. I'll talk about that a little bit more in detail as we get going a little bit later in the show. But, that was a big event last week. The prior week's neoclassical failures also continued to show downside action. And what I'm talking about there, of course, is what happened in the NASDAQ and in the NDX. And essentially that was the bearish retest regenerate. That was a full retest regen right here, and since then it's been nothing but some more downside action off of that, which tends to suggest that in fact that really was where the sellers came in, made their sells, and now they're getting the push to the downside. Note also, since we're on this daily chart, you're coming into that area now. That's kind of the key area, right? Can it hold or can it not hold? And I think the main thing this week, as we get a little bit farther into the show, is going to be that question is, are these markets going to hold at these levels or not? On the sector view, there was really very little in the way of bullish action. You had some relative strength in the financial sectors, consumer durables as well, and in the utilities. Those were interest rate sensitive type moves. I don't know if they're going to last. They really happened off of Fed talk. World markets continue to be under pressure. Economic data continues to point to slowdowns. And so we're not seeing any kind of relief outside, on a fundamental basis. We're not seeing any kind of relief in the world markets, domestically, in the economic numbers. And the earnings really are going to be the next key catalyst. They're a couple of weeks out now. And so I think the focus will move to the earnings fairly soon. If we look at the technical picture, I want to look at just, I actually want to focus a little bit more on the longer term stuff, and I'll do that in this section. And the reason for that is we're at a point now where we need to think about, from a longer term perspective, where are we going, because we're moving into October. Typically, October, November, December, very bullish, and actually all the way through April, the most bullish period of the market. And the question is are we going to see that or not? And I want to try to focus on that a little bit today. So on the positive side, we have that divergence I just talked about. We're near the bottom of the range that I was just showing you. And that's true on all the indexes. So those ranges are fairly apparent. Here's the NASDAQ, right? If we look at the NASDAQ, you kind of have it here off of this range, right, on the daily chart. If we look at it on the Russell, you also have it on the Russell, the same sort of setup, right, where it's probably not there. It's actually down here. If we take this area here back down to these lows, I'd probably draw it in right about there, and we're right at it now at the lows. Right, that's kind of the range. And the question is this range going to hold, or are we going to go all the way back down to the lows? Now, one can argue that the lows are where we could be thinking, right? Because you got a lot of volume down here at this level, and the last attempt to hold is probably going to be right here where we're at. And this is on the Russell, of course. Now the Russell had tested under and back over, so it's not as it's not arguing as strongly that we should go down and test again. But you don't have that on some of them. For example, the S&P 500 never did test that high volume lows. So it's certainly possible we're going to go back down there and test them. So if we come back here, that's kind of the ranges. September's about done. Again, the worst month of the year is just about over. And so that's probably a positive as well. October tends to be a month that can go either way. But a lot of times October tends to reverse whatever September does and gets that positive part of the year started again. Negatives, though, bearish MTTFs. Now, this is something we haven't looked at in a while, but it is worth a look. And probably at this particular point in time, it's certainly worth a look. If I look at, this, I've got the trading cube up. One of the things that has not worked, and actually when I wrote the third book, there were some anomalies in the longer term time frames that were hard to explain, and we have it happening again now. And I tend to dismiss it as having to do with the Fed intervention, right? The central bank intervention, not only here but around the world, propping and extending the gains on these markets by changing the dynamics of the marketplace. And so we have extremely stretched, maybe is the word I'm looking for, MTTFs. And if you're not familiar with the concept, I'll just quickly go over it. We know the entire population of trend because we track all the stocks that have trend. And therefore we know big N in terms of a statistical model. And so we're able to project on a fairly reliable basis how long, almost like a light bulb, how long is the light bulb going to last before it burns out? Well, we can do the same thing with trend. We can say, okay, how long is trend going to last before it turns, right, and transitions to something else? And so when we're thinking about it on that perspective, right, MTTF is a way to measure that. And if you're on the trading cube, if you come here, you can actually click on that little number and it will pop up a cumulative MTTF. Now what this means is that your 6 bars, in this particular case, I popped up the intermediate term time frame on the S&P 500. We're 6 bars into a bearish move. And if you look at the literature and what I've written before, typically you can make it up to about 70% before this thing gets really stretched. Well, 70% in this case would be 32 bars. And we are at 6. So you have 26 more bars, and we're talking about a weekly time frame, so there's 26 more weeks before this thing becomes extremely stretched. So with 4 weeks in a month, 6 months basically, this market could continue to trade to the bearish side before this becomes extreme. Now, along the way, of course, it could reset. In other words, we could get a sideways move. But if you look at the charts, and we'll pop up the S&P 500 here and kind of look at it on a weekly time frame. To get a transition, what's going to have to happen, if you just look at it and ask yourself, how would you get it? Well, let's just say, for example, this turns to a swing point high. That would mean we need 5 more bars, 5 weeks of highs that are lower than that one for that one to become a swing point high. And then we could actually test and break that and change the intermediate term time frame. Another possibility is you go lower and then bounce up, set another one, and then eventually that one becomes a high. Somewhere along the line, it will print a high, a swing point high, that eventually will get broken, right, and transition trend. But right now, the one that's the best candidate, of course, is this one that we see up here at this area. But even for it to actualize, we're going to need, 5 more bars out, right, before it can go up there and actually even challenge it and change it. So from an intermediate term perspective, and the reason for bringing all this up is that more than likely we're going to see this market remain under pressure for some period of time. And that's what I've been talking about for a while, and I'm still talking about it. And the reason for it is because that's the way things are setting up. That range we were looking at on the daily chart, basically in this area. So we're coming down to change or test that range. We had done a bearish retest regenerate already, right, in this area. We had done part of that testing. Now we're generating down. We're coming into this big bars high again. This is the October low last year. If we get under that, right, then we get into the bar, and then we might even challenge deeper. But right now, the odds still favor us more than likely to continue to trade in some sort of a choppy range, in this area for some period of time. And so I don't want to think beyond that other than to say, hey, the MTTFs, as they are currently positioned, they're not set up for us to move, right, significantly higher anytime in the near future. And if we did, it actually would be more bearish. In other words, we would come straight up here now, right? It would be a more bearish scenario because more than likely we would see on the daily time frame, we would see these areas fail. And then the top of this range on the weekly, which coincides, right? This area right in here would be an area that we'd probably see a failure. And then that would probably set the stage for another move down. Now, although I don't watch, the head and shoulders stuff that the classical TA guys do, you can pretty easily draw that out and say, hey, if it does make that move back up, right, it is going to create that head and shoulders kind of top that everybody always looks at and talks about. And I guess if I were to draw this, I would probably use, this area, right, is kind of I'm trying to think if that's the right one or this one. Again, I'm getting a little rusty at this. One of these would be the neckline. So again, I don't really do that stuff anymore. I'm more interested in levels and how price and volume and time come together at those levels where we know that there's significance. And so anyway, the point here is that if we look at the MTTFs, we can see that it's young in its bearish trend, and it has plenty of time to run even farther. And if we bring up the short-term time frame, this one just transitioned again. We're only 2 bars into it. So again, this one could run and bring it out to about 70%, about 33 bars, so 31 days. So in other words, all the way to the end of October before it would turn. So you'd be kind of deep into the earnings season, right? Really starting to heat up before this one has to turn or at least become stretched. And so what's the point of all this? Well, the point is that this particular market is bearish, right? We've got bearish action on the short and intermediate term time frame. And if I switch over now to the trends, you're going to see that that bearish action is solid across all intermediate term time frames, all sectors, all indexes. When you stretch to the downside, you typically bounce, and that's what you're seeing with some of these, right, sideways, right? These are the bounces that are taking place. And we've got 3 of them now, so I wouldn't be surprised to see more of these trend back up, right, to try to work their way back to a sideways trend at some point. All of that in the context of a longer term, intermediate term time frame bearishness. So if we see some bullishness on the short-term time frame, we still have this and this doesn't change, right? Then these would eventually roll back over as well. And so at some point here, maybe as things get extended, at some point here, we may see some short-term strength come into the market only to lead to farther weakness farther out. And so that is the reason of putting this as a negative, of course. The bearish regenerations we already talked about. The indexes and sectors are bearish on all the time frames which we just looked at. And the bounce has been fairly weak as evidenced in the short-term trends. In other words, we really didn't see much in the way of a change here in the short-term trends. We got a little bit of a bounce, but nothing big. And that's a problem, right? You get a weak bounce on a big move down. That says you're going to stay in that direction, that longer-term trend direction now for a longer period of time, which is also what the MTTFs are telling us. If we switch to the fundamental picture, it's hard to find any kind of fundamental positives. I said that last week. It's still the same. And all the things that applied last week pretty much still apply. So I'm not going to go over those all again. I don't really see any change there this past week. On a expectation kind of thing, what do we watch? Last week we were looking to see, are we going to see some sort of a bearish retest regen continuation? And that's exactly what we got, right? This thing was set up to try to go lower, and that's exactly what we did. So the market's behaving as we would expect, which gives us confidence in the idea that this bearishness is going to continue for some period of time. Sure, we can get moves higher in it. That range that we were just looking at, we could bounce right back to the top of that range. The question is will this lower end hold, or will that range expand all the way down to the lows that we saw in August? And so this week it's going to be all about the bottom end of that range, right? Are we going to hold, or are we going to slip farther down? And I think a lot of it's going to have to do with what the Fed officials keep saying and what those economic numbers look like for the new month. And so speaking of the economic numbers, if we push forward here, I'll come back to the member question, but if we push forward to the economic numbers, we're back end loaded. So about Wednesday forward, we start getting all the PMIs. And this week we have so many Fed speakers. In fact, we got 5 of them on Friday. Yellen speaks again on Wednesday. And so we got a lot of data coming in, right? A lot of choppy type stuff happening that could push this market around. I want to pop back up here and take this member question. And the member question really had to do with, he was wondering if I'd comment on what's happening in the biotechs and when there might be an opportunity to take on some of these good companies. As I showed you, biotech went from 100 to roughly 400. If you're looking at the IBB, if I bring it up and put it on the long-term time frame, right, that big long stretch higher. And if we look at the BBH, which is a little bit heavily weighted towards Amgen, right, we still had a long-term move to the top side, and this one only goes back because they actually they sold it and somebody else reconstituted it. But even from where it goes back in 2012, right, you essentially went from 41 to 141. So you can see the kind of huge gains that were made. The other thing I would note, and I'm going to go back to the IBB because the IBB has the longer-term view that we can look at. If you look at this on the way up, the one thing I would note to you is when you're looking at a sector, a market, a stock that has been extremely bullish, what you're going to find is that the bullishness is so extreme that you can't create swing point highs on the way up. I mean, look at this. The last one you had was in 2011 on the long-term time frame. In other words, they just buy it. They buy it, they buy it, they don't let it drop. And they keep buying it until it pops. That's what we've seen here, even here on the first big drop, which was, in March, May, I think it was like March. Let me get my cursor so I can see it. I think it was March, April 2014. We had that big drop, right? Market falls precipitously in this sector, huge volume expansion, right? And then what does it do? Within 6 bars, it's making new highs again. That's how stretched and how bullish this sector has been and how much money has poured into it. Now you're starting to see volume escalation again. What I would want to point out to you is even though you had huge escalation on the daily chart, you don't have it yet on the weekly. And so my suspicion is that this thing isn't done and it's going to continue lower. And that this high here that we see, even though it didn't register as a swing point high, it looks to me like it is going to come back into it and test it. So in other words, the lows that were printed here a month ago aren't done, the August lows, and we're going to test those lows again. And until we see this sort of spiky, huge volume, I don't think you've blown out enough people yet. In other words, they haven't given up yet, even with the big declines that are already registered. So I would be very careful to try to step into this sector anytime soon. And you can read what I said here, but essentially, the first thing you got to do is you got to figure out what your time frame is. And, judging from the question, it looks like it's an intermediate term time frame being asked about. So assuming that, we just suffered a high volume sell-off. And let me pull that back up on the weekly chart. So on the daily chart, you had a huge volume spike. On the weekly chart is a big spike as well. That looks like it's going to, it's deep into this bar already. That looks like it's going to test the lows. And it's only there that you can begin to even ask the question, is it time? So when I'm looking at this chart, clearly to me, it's not time until we come back down here and test these. Now the problem is you're already bearish, right? And it looks like it potentially could set up a huge ABCD structure to the downside, and the whole market potentially can set that up. You've got a weak market and now this weak sector. And so if I'm looking at this sector, and if I draw this in more correctly about up to here, right, this low back from October certainly looks to be on the board. And so I probably wouldn't be focused on this until we see this bar attacked and how it's attacked. And my guess is you're going to attack it with big volume as you get down there. And though those March, April lows are over here somewhere with the big volumes and they've fallen off, you can still see them on the monthlies. And my suspicion is that's where we're going to try to trade back to. We're going to try to trade back to where all the big volume was. So I think it's too early. What I would do if I were you is I would go into this group. I'd pull up the longer term charts. I've got Amgen up. I'd pull up the longer term charts and I'd start looking at how they're coming back into their support zones and saying, okay, are they going to hold or not? In other words, Amgen, for example, if it trades back into this low on October 20th, that's around 133. The week prior was 127. And if volume doesn't expand, then Amgen may start to show positive divergence. What I would like to see is multiple stocks in the group start showing positive divergence to tell me that the sector itself has probably washed out, and more than likely you'll see some sort of a big spike in volume towards the lows because this is such an overloved group, right? It's the one group that has returned huge profits to almost everybody. And so I really wouldn't focus on buying it until we see that kind of action take place. Moving to the bottom line, what do we think is going to happen and how do we position for it? Last week we were expecting more pricing pressure and that's what we got. Now we are at the position where the setup could go either way. In other words, I don't have a strong take this particular week, and I'm going to bring back up the S&P 500. And on a weekly time frame, the question in my mind is, do we see this area breached? And note, that's the last year's October highs of the low, right? The big volume low. Do we see that area breached? And that area happens to be, lo and behold, the range. If we do, right, and we get under it, right, then we're going to come back down and test this high volume low most likely. If that breaks, then it would be down to here. And so you can see the projections of how they could extend to the downside. And that projection, if you go back and draw it here on the weekly, right, the ABCD structure could certainly take us much lower than even these October lows. And if that happens, we're going to transition on the monthly, which is going to be a major transition because those do not change very often. The last time we changed was way back in 2000, I think it was 2009 or 10. I'd have to actually pull up. Let me pull up while I'm talking about it. If we go back, it was way back here. It's probably 2010, I think, is when it transitioned higher. So they don't change often, and when they do, it's significant. You have to pay attention to it. So that's that setup on the downside. On the upside, right, we could certainly get the bounce back up in this range. So if I come back to the chart, right, there's nothing to prevent us, and I'll just pull up the daily this time, there's nothing to prevent us from taking this range that we've already mapped out, right, and seeing it work back to the top side of that range. And so I don't think that one should lean too far either way this week. What we really want to do is, rather than guessing what's going to happen, what we really want to do is observe how this market trades into the bottom of this range, and does it hold or does it not. If it holds in this lower area, right, if this area holds, great. We're probably going to try to trade back to the top of the range. If it doesn't, then it's telling us something else. So that, to me, is where the focus is. I don't have a strong opinion. What it tells me to do is be careful until I see that bottom tested and we see some evidence that this market's either going to move higher or not. The portfolio, we've been very careful all year long, really. And we've tried 2 or 3 times to trade to the upside, and we got burned on most of them. Our profits have come the last couple of months, as a matter of fact. We've gained when the market has plunged, and that's because we've been very careful. And the portfolio is very thin. We've got a spread on. We've got an exchange, a currency on. We've got one of the stronger sectors long, and we have 2 strong stocks that we keep trading up and down. Outside of that, we haven't really done much. And outside of that, I don't think I'm going to do much. I think the real thing is to continue to focus on what's working and what's not, and preserving your capital as this market sells off. We may still get, and I'd said this about 2 months ago, we may get that move down that takes us 20-25% lower on the S&P 500. That would take us down into, something like 1650, 1600. As a matter of fact, if I pull up the charts, let's do that real quick, and pull up the monthly chart on the S&P. The last swing point high, let's just draw it in, was here. It's already been tested. And since then, we had a huge run up. If I look at this area, there's a little congestion in this zone, right? And even if we're going to trade back even much deeper, right, one would expect these lows potentially to break. If they do, a little bit of a plunge right into this congestion area, that would also mark the ABCD structure to the downside. That's potentially the worst case to the downside over time. Again, we're on a monthly, so it's probably going to take a while to play out if it does. And then if we really do turn bearish and it stays bearish for an extended period of time, one could come all the way back to test again. So one could see this market trade even lower over time. That's worst case. If you think about it the other way, we don't have a transitional trend, and unless these break, this market still remains bullish. And what we're getting instead would not be a turn long term, right, to the bearishness, but instead some sort of a larger correction. And let me draw it a different way. One could see, for example, some sort of a large range on this time frame playing out and then trading inside that range. And that could last for a while. So I don't want to lean too far one way or the other, but clearly, on a shorter term basis, when we're talking, intermediate term time frame, and if I pop that one up, right, the market's bearish right now. And we have to respect that on this time frame, it is bearish. And until we see some sort of a swing point high develop and be taken out, and these bearish retest regions to fail, to push us lower, right? We have to respect that the trend is to the downside, and we should be approaching the market with that in mind. Okay, I hope that helps. As far as, what do we do next week? I think that we just position ourselves as we have been, and that's carefully with a downside bias. But now we're at the bottom end of that range, so we don't want to try to stretch our trades. What you really want to do is you want to sell strength. And so let it show you strength and then sell the strength if that strength looks like it's going to fail. And that failure would be back up here into what you see as this big red area. That's the resistance zone. I suspect it's going to continue to be the resistance zone for some time to come. We'll leave it at that. Thanks. See you next time. Good night.